Mayuresh Joshi is now joining us. As we all know, he's a fund manager at Angel Broking. Mayuresh, always a pleasure to see you. What are you watching out for the markets today?
Afternoon, Fatima. Again, I think the cues are pretty heavy this week, and to a large extent, though the Fed rate hike is widely anticipated by the markets, we're also having a host of domestic views. So what came out in terms of the inflation data yesterday and the IIP data, I think, yes, it was a shocker for the market. The bond yields have reacted accordingly. But what happens in terms of the exit poll numbers by the end of this week is going to be something which will define the market move in the coming week. So to a large bit, my own sense is that the macro picture probably still looking sticky, but with government reforms taking shape and expectations of budget around the corner, corporate earnings is going to be a focal point for the markets. So I think markets probably stuck in a range, a wide range, but I think it's going to be more stock specific.
Right, Mayuresh, and we'll get more perspective.
BTVi is learning exclusively that JSW Steel has submitted a bid for Monet Ispat along with Apollo PE. The person who's getting me this news is Swati Khandelwal Jain. She's joining us on the phone line with some more details that she has exclusively right there. Swati, we do understand that Sajjan Jindal has been eyeing distressed assets. He's also zeroed in on Monet Ispat. In fact, you were the one who reported that earlier. Just take us through what you have learned in terms of the latest developments there.
That's right. So, as you know, that Monet Ispat has been looking at, JSW has been looking at a lot of steel assets, including Monet Ispat. And in fact, Monet Ispat has now become the first press company to get resolution plans from prospective bidders. And we understand, as we told you yesterday, that JSW Steel has indeed put in a bid along with Aeon or Apollo Private Equity for the acquisition, or at least the bid for Monet Ispat and Energy. And now this is perhaps the only bid that's coming. Remember, Tata Steel was also interested in Monet Ispat, but we are not yet sure whether they put in a bid for the company or not. What is largely being understood is the fact that this will be a very important acquisition for JSW, if at all they bag it, because if you see, Monet Ispat owns 1.5 million tons of integrated steel plant, along with 0.8 million tons sponge iron plant, a 2 million pellet plant, and almost a 1 million ton inter plant with a 250 megawatt captive power plant in Chhattisgarh. It also has a 7.5 million tons of coal beneficiation facilities in Chhattisgarh and Odisha. So all of this will add to the aim and ambition of JSW Group in enhancing its steel producing capacities and capabilities, and the backward integration that that Monet Ispat has will only help them achieve that. So this is going to be important. Remember, yesterday was the last day submission of this. So Monet Ispat is done. Now the resolution of this should happen between January 13th to April 4th, because if you remember, the Committee of Creditors said that the finalization of a resolution plan should be done in 180 days. So, and there was a provision of 90 days extension. But if you keep that in mind, by April, definitely the announcement should come. But hopefully, if this is the only bidder, then maybe a week or so we'll know what happened to Monet Ispat. And after that, of course, there are more companies that are lined up, like Electro Steel, Bhushan Steel, and so on.
Swati, thanks a lot for getting us all of that. Swati reporting that we've seen JSW Steel really submitting that bid for Monet Ispat as well. In fact, I just want to come to my guest here. Mayuresh, we'd of course seen a bit of news in terms of how perhaps the Tata Steel had also been looking into it. However, they have not sort of been at the forefront of things. They did express an interest earlier. Just a little bit more in terms of how you're looking at the kind of opportunities that exist on both ends here.
As I mentioned earlier, Fatima, I think a few of these assets do look very, very lucrative, because in terms of the operationality of these assets, they're extremely well-managed assets, and it's just about the sweating of the assets that the suitor can do. Largely, again, I think what kind of enterprise valuation actually comes out from these assets in terms of bidding is going to be extremely critical as well. So if the bids are in the favor, which in all probability should be, and quite reasonable compared to what the valuations were a few years back, you're probably going to get assets if they are subject to what regulatory approvals come through. and the suitors are going to benefit. So the whole sense here that I'm getting is in terms of both volume growth domestically, as these companies have performed. JSW Steel, Tata Steel, for example, have been doing exceptionally well on an EBITDA per ton basis as well. So you've seen some amount of weak links in the couple of quarters gone by. My own sense is that new acquisitions, if they do happen with the caveat of regulatory approvals, will add on to volume and the leverage on their balance sheet. And over a period of time, as demand resumes, I think they'll be in a very, very sweet position. So I think the suitors is something that I'll be very, very hopeful about and watch out for.
Yeah, certainly. But Mayuresh, coming to you now with the trajectory that oil prices are taking. Only yesterday we were talking about the impact it has on paint stocks, on aviation stocks. Today we are talking about the oil and marketing counters, the oil marketing counters. At this point in time, they have been a buzz. But going ahead, if you're looking at the larger picture and the continued trend, if at all you can do some crystal ball gazing for us, how do you think you would play crude prices and its impact on sectors and stocks?
I wish I could do crystal ball gazing, Vikram, but to a large extent, I think if one really has two presumptions of crude not crossing 65, and the other presumption is that crude crosses 65 and probably touches 70-75 on an average, and the Indian currency in both these scenarios, if crude doesn't cross 65, staying in a range, and if it does cross 70-75, it appreciates to a bit. So in that extent, I think the earnings of OMC companies probably start getting hit in terms of EPS estimates for 19 and 20. To a large bit also, I think the upstream companies would also need to have some amount of subsidy sharing having started over $70 a barrel. So again, I think our own estimates are suggesting that it should, in all probabilities, not cross $65 or $68 a barrel. And again, the rupee probably should stay constrained in the range. What it probably does, both in terms of OMC, that is downstream companies, and upstream companies, is that there is no subsidy burden. So I think there is no under-recoveries that probably happen on that front. For upstream, if these prices stay in a very tight range, it's a direct pass-through in terms of realizations that they can benefit from with higher crude prices. And to that bit, I think the earnings estimates do get a fillip. For downstream companies, again, I think if they stay in a range, I think it's not too much of an impact on earnings. And a large element of their earnings will also depend upon marketing margins, both on petrol and diesel, as well as the cash flows that can come through with capacities getting expanded, which means that the refining margins probably hold good as these capacities come on stream. So I think at this point of time, I think it is still more biased towards downstream companies, in my opinion, with all these presumptions.
Mayuresh, talking about presumptions, this is one thing I just wanted to clarify. Is there some kind of an impression that OMCs are still largely governed really by government, and they don't really, and perhaps that sort of makes investors lose a bit of confidence in terms of the kind of pricing power that they actually have? I mean, is that a fundamental issue that we're looking at here?
No, so to a great deal, Fatima, I think the pricing power has probably got in favor of the OMCs, and at the same time, the petroleum minister a couple of months back was speaking in terms of the marketing margins and the flexibility thereof staying with the OMCs as well. So there is no tweaking happening in terms of any of the pricing efforts that OMCs are taking. So the large element, as I was mentioning, rests on the OMCs in terms of improving the marketing margins, and the sensitivity to earnings is pretty large, both in terms of refining margins going up, which it should, over the next couple of years as new capacities with new complexities and better complexities come on stream, and as marketing margins increase both on petrol and diesel. So I think the dual benefit should probably benefit OMC companies. But as I said, I think the two key variables remain crude not crossing 65 and the rupee not depreciating too much against the dollar, which should work in favor of earnings estimates for these companies.
Right, so that's your take on the oil and gas pact as it stands with crude oil prices, and that's the impact that's playing out right now with them spike. What's your own take on stocks like SBI Life and HDFC Standard Life? Do you think that there is enough headroom here on? Current valuations look good enough to you for investments from a long-term perspective, Mayuresh?
So Vikram, again, I think if one really has a long-term view of 3 to 5 years, I think this is one sector which will keep on growing well, both in terms of penetration. As more penetration starts happening, the kind of premiums that these companies have been recording over the past few years are going to compound at a very fast clip. Now, what basically happens in terms of this business itself is that the premium collections, as they improve drastically, the top line growth is very, very significant. The fixed costs do not grow in that same proportion. So I think the direct benefit starts happening onto the operating level as well as the margins. And this is what is the kicker for insurance companies going forward. So I think this business model is obviously going to work for all these players as more penetration starts happening through different distribution channels. And this definitely augurs well for a lot of companies listed within this space. So yes, I think if one really has a long-term view, if you're holding these stocks, continue holding. I think I remain very, very optimistic over a longer period of time.
Mayuresh, such a pleasure to speak to you on this day. Thanks a lot for really taking us through, I guess, the nuances of how one should really be approaching the stock markets at this stage. Thanks a lot. Always a pleasure to speak to you right here on air with us on BTVi. Still ahead, we are going